If you're going through a divorce and someone told you, just call your lender, this video is for you. Because not all loan officers understand divorce, and choosing the wrong one can quietly cost you time, money, and your peace of mind. Today I'm going to show you how to choose a loan officer who actually understands divorce, not just mortgages. If we haven't met yet, I'm Tami Wollensak. I'm a divorce mortgage specialist, and I help people navigate one of the biggest financial questions during their divorce. What do I do about the house? Whether that means keeping it, buying something new, or understanding what's realistic before decisions are finalized. And if children are involved, this decision matters even more because stability matters. Let's start with something that's really important. Divorce changes how mortgages work. And this is where a lot of people get tripped up. Most loan officers are excellent at traditional purchases and refinances, but divorce introduces complexity that many lenders are not trained to spot. Things like support income, joint debt, timing of the divorce decree, settlement language, ownership versus responsibility. If those things aren't handled correctly, people often find out too late, after agreements are already signed. Here's the truth. Your attorney is not trained in mortgage underwriting, and your loan officer is not trained in family law. When those two worlds don't communicate, the person caught in the middle is you. That's why choosing the right loan officer during divorce is critical. Let me walk you through some red flags to watch for. Red flag number 1, the loan officer who says, let's just wait until the divorce is final. Waiting often removes options instead of creating them. There are things that can be sometimes done before the divorce is finalized that cannot be done after. And once agreements are signed, flexibility's gone. A divorce-savvy loan officer understands timing matters. Red flag number 2, they don't ask to see your settlement draft. If your loan officer isn't reviewing how agreements are written, they're missing half the picture. Language matters, support matters, buyouts matter. What's written or not written can determine whether you qualify for a mortgage at all. Red flag number 3, they dismiss support income. Support income can sometimes be used for mortgage qualification, but only if it's structured properly and it meets specific guidelines. If someone automatically says you can't use that without asking questions, that's a problem. Red flag number 4, they say your attorney will handle that. Attorneys handle legal outcomes. Loan officers handle underwriting. If your lender isn't helping you understand how financial decisions affect future qualification, they're staying in their lane but leaving you unprotected. So what should you look for instead? Here's what a loan officer who understands divorce actually does. First, they ask early questions. They don't wait until the divorce is over. They ask things like, who's staying in the house? Who's leaving? Is there support income? Is there a buyout? Are there joint debts that will remain? These questions aren't intrusive, they're protective. Second, they understand timing. They know the difference between planning before the decree, navigating during your negotiations, and executing after the divorce is final. They help you understand what's possible at each stage so you're not making decisions blindly. Third, they collaborate. They're comfortable working alongside attorneys, mediators, financial professionals, not to give you legal advice, but to make sure everyone understands the financial implications of decisions being discussed. This collaboration often prevents costly do-overs later. Fourth, they educate without pressure. They don't rush you. They don't scare you. They explain your options, your constraints, and your trade-offs, so you can make informed, grounded decisions rather than emotional ones. This is exactly what I do and why I do what I do. I don't just help people qualify for mortgages. I help people understand what's possible before decisions are locked in. My role is to bridge the gap between divorce and mortgage lending so families don't unintentionally set themselves up for financial hardship after the divorce is over. And I want to say something really important here. Divorce doesn't have to mean financial chaos. With the right information and the right professionals, it can be thoughtful, it can be strategic, and it can be focused on what comes next, not just what's ending. Especially when children are involved, the goal isn't to win. The goal is to build a stable next chapter. If you're negotiating divorce and the house feels confusing, I offer free 15-minute consults. No pressure, no sales pitch, just clarity around your options, your timing, and your next best step. You can find the link in the description. And if this video helped you, please like, subscribe, or leave a comment. I read and respond to every single one. You're not alone in this, and there's a calmer, more informed way forward. Thank you so much for watching.